All right, let's get right into one of the biggest stories happening in the energy world. We're talking about Shell. This company is caught in this wild, high-stakes tug-of-war. In one corner, you've got record-smashing profits and a stock price that's on fire. And in the other, you have this intense, growing pressure to, save the planet. This is the story of that giant balancing act. To really wrap your head around this, you have to see Shell through two completely different sets of eyes. To Wall Street, it's a market darling, an absolute cash machine. But if you talk to climate advocates or even a whole bunch of its own investors, it's a climate villain, putting profits today way ahead of the planet's future. And look, the market darling argument, the numbers don't lie. The stock hit a new high, they raked in a massive £22 billion in profit last year, and they're just showering their investors with cash. We're talking $3.5 billion in share buybacks in a single quarter. Plus, they haven't missed a dividend payment in over 20 years. From a purely financial standpoint, they're a beast. But then you flip the coin. Shell is dealing with major revolts from its own shareholders about its climate plans. They're watering down and in some cases just throwing out their emissions targets. And this isn't just, protesters with signs. A court in the Netherlands has literally ordered the company to slash its emissions. The big accusation is that they're just backtracking on everything they promised. So what gives? How can one company be both of these things, the hero and the villain, at the exact same time? Well, to figure that out, we gotta follow the money. So let's start with the money, because you really can't get what Shell is doing now without seeing the incredible financial turnaround they just pulled off. It's easy to forget, but just a few years ago, things looked really bad for them. Think back to 2020, middle of the pandemic. Shell lost almost $22 billion. That is a deep, deep hole to climb out of. And wow, did they ever climb out? Fast forward to last year, and that massive loss has completely flipped into a profit of over $42 billion. I mean, talk about a comeback. That kind of swing, it changes everything. It gives you confidence, and more importantly, it gives you a mountain of cash to work with. Okay, so how'd they pull that off? We need to quickly understand one piece of business jargon, but stick with me, it's super simple. It's called ROCE, Return on Capital Employed. All it really means is, for every dollar a company invests, how much profit does it get back? For a big oil company, anything over 10% is considered pretty healthy. So look at this. In 2021, Shell was just barely over that healthy line. But then 2022 comes along, energy prices go through the roof, and boom, their ROCE more than doubles to over 21%. Yeah, it cooled off a little in 2023, but 18.5% is still fantastic. The main takeaway here is simple. Their core business is a money-printing machine right now. Okay, so the financial engine is just roaring. But that's only half the story. While that's happening, this climate pressure cooker is building and building, telling a completely different tale. And this is not some small protest. We are talking about 27 major investor groups who together manage $4 trillion. That's trillion with a T. They've all banded together to demand that Shell get way more serious about its climate targets. When that much money starts talking, a company has no choice but to listen. And they're not being vague. They have a very specific ask. You can see it in this quote right here. They want a credible Scope 3 absolute emissions target. Now that phrase might sound a little technical, but Scope 3 is the whole ballgame. We'll get to exactly what it means in just a second. But the message is clear. Stop talking and show us a real plan. So on top of the investors, you've got the courts. And this is a huge deal. A court in the Netherlands handed down this landmark ruling, ordering Shell to cut its global carbon emissions by 45% by 2030. Think about that. This wasn't some little fine. This was a judge telling one of the biggest companies on Earth to fundamentally change its entire business. Okay, so let's unpack these Scope 3 emissions that everyone is so focused on. It's actually really simple. It's the pollution that happens when customers use Shell's products. It's the gas being burned in your car, the jet fuel in the plane. And for a company like Shell, this is not a small piece of the puzzle. It's about 95% of their total carbon footprint. This is the whole issue. So you've got record profits on one side and this massive climate fight on the other. So what's Shell's move? Well, they've made a really big and pretty controversial pivot in their strategy. Just look at the timeline here. In 2021, they rolled out this big energy transition plan. Sounded pretty good. But then, this year, they watered down their 2030 target and just completely threw their 2035 target in the trash. And at the exact same time, what are they doing? Announcing plans to massively grow their business in liquefied natural gas. The message couldn't be clearer. They're focusing more on profitable gas and less on those climate goals. And here's the official justification right from the CEO. He's basically arguing that, hey, we have to make our shareholders happy now. And if we make a ton of money from that, we'll be in a stronger position to pay for the green transition later. It's that classic profit today to pay for the planet tomorrow argument. But you know what they say? Follow the money. And if you do that, well, it tells a very different story. Take a look at their spending in one recent quarter. A whopping 92% went into their old-school fossil fuels and chemicals business. Just a tiny 8% slice went to renewables. This spending really shows you where their priorities actually are. And if you want the brutally honest reason why, just listen to this quote from someone in their investor relations department. He's basically saying, look, we try to please everybody, but the returns we're getting from renewables have been disappointing. And then he gets right to the point. We cannot just continue to put shareholders' good money into something that delivers low return. That right there, that's the financial logic driving this entire pivot. So all of this leads us to the ultimate dilemma. It's a tricky choice facing anyone, from a giant pension fund down to you and me, trying to make sense of where Shell is headed. So let's just lay it all out. The bull case for Shell, the optimistic view, is that they're a disciplined financial machine. They're focused on their most profitable business, they're giving huge returns to shareholders, and the stock has momentum. But the bear case, the reason to be worried, is just as powerful. They're facing massive legal risks, growing pressure from all sides, a damaged reputation, and this huge long-term risk of their oil and gas assets becoming worthless. Which leaves us with the final big question. Is Shell just being a pragmatic leader here, making tough but necessary choices to get through a super complex transition? Or is it a financial giant that looked at the numbers, saw renewables weren't as profitable, and decided to make a cold, calculated bet against the world meeting its climate goals, all for the sake of short-term profit? The answer to that is going to define not just the future of Shell, but maybe a big piece of our planet's future too.